This support and resistance strategy works on any forex pair. It is simple and profitable, and it is the best strategy for beginners. In this video, I will share with you a step-by-step guide for trading this strategy. You will learn the entry rules and the important theory, and I will show you how to find the best and the strongest support and resistance levels. Take notes and let's get started. First and foremost, in order to trade support and resistance levels profitably, you need to know how to identify them properly. You should know how to recognize a significant structure level. And here gives the first rule. I believe that the strongest support and resistance levels should be strictly found on a daily time frame. Moreover, proper support and resistance levels should be strictly historically significant. It means that it should be respected by the market at least 2 times in the past with a clear and strong reaction to that. Look at this key support on euro-dollar. First, it was respected as the resistance and a strong bearish reaction followed. Then after the breakout, the structure turned into support, and from that key level we saw a strong bullish reaction. And here in pound dollar pair we can see a perfect example of a significant horizontal resistance. The resistance that was respected 2 times by the market in the past, and we saw very strong bearish reactions to that. Support and resistance levels that I showed you are truly significant. But trading for more than 9 years, I realized that just a significant reaction of the price to a key level is not enough to make it reliable. I found one more important condition that strengthen a key level, the market trend. It means that we will treat only the supports that align with the market trend. It means that we will buy the market from the support if only the market is trading in a bullish trend. Look at the price action on New Zealand dollar pair. We are trading in a clear, strong bullish trend on a daily, and in this bullish trend we have this key horizontal support. Buying the market from that support, we will follow the trade, and it will be the best support for us to buy the market from. And we will strictly trade only the resistances that align with the market trend. It means that we will sell from the resistance if only the market is trading in a bearish trend. Now look at Aussie dollar pair on a daily. We have a clear bearish trend here, and in this bearish trend we can spot a significant resistance. The resistance that was respected 2 times by the market in the past. Selling the market from that resistance, we will follow the trend, and for us it will be the best resistance to sell the market from. And if you decided to sell the market from the resistance and the market is trading in a bullish trend, it will mean that you will go against the trend. The probabilities of winning such a trade will always be lower. Look at Euro New Zealand pair on a daily. You can see that here we have a very significant horizontal structure resistance. But at the same time, we can see that the market is now trading in a bullish trend. Learn how to trade Forex in my trading academy. Watch how I trade live on my VIP daily live sessions. Get a book with my trading strategy and a video course teaching you technical analysis. For more info, check the link in the description below. Selling the market from that resistance, we will go against the trend. And you can see that when that resistance was tested, the market simply violated that and went higher. And buying a key support in a bullish trend, we will also go against the trend. Such trades will always have a lower accuracy. Now look at Euro CAD pair on a daily. We have a clear, strong bearish trend, and in this bearish trend we can spot a significant horizontal support. But buying the market from that support would be not a good idea, because you can see that buying from that we would go against the trend, and when the market tested that support, it simply violated that and went lower. Now let's discuss entry points, stop loss placement, and entry selection. Once you identified a key resistance in a bearish trend, set a sell limit order on that. Look at Euro-Pound pair on a daily. The market is trading in a bearish trend, and we see a significant resistance that meets our criteria. What we do, we set our sell limit order on a retest of that resistance, and from that resistance we will sell the market. For stop loss, we will apply average true range indicator, and our stop loss for the trades will be 0.5 ATR. And for average true range indicator, we will apply default settings, and we will use 14 length. Once the trade becomes active, once the market reaches the entry level, the next thing will be to place the stop loss. What we do, we add the ATR indicator on our chart, and here we check the ATR. ETR now is 27 pips, and our stop loss will be simply half of that. So our stop loss for the trade will be 14 pips. From the entry level, we measure 14 pips, and here will be our stop loss level. So here with the ETR, we quite accurately identified a safe stop loss for our trade. Selling the market from the resistance, our take profit always will be the closest daily support. The last thing that we should do, we should identify the target for the trade, and our target will be the closest key support. Analyzing the price action, we can easily spot the key support. It is right here, and our target for the trade will be simply that support. So here is the trading setup that we spotted: stop loss and take profit. And make sure, by the way, that entering the trade, you should always have a positive reward to risk ratio. It means that the reward, the potential reward, should always be bigger than the potential risk. If the risk is bigger, simply do not take the trade. And look how perfectly this trading setup played out. Now let's discuss how we buy from a key support. Once you identify the key support in a bullish trend, set a buy limit order on that. Look at the price action on Euro-Yen pair on a daily. We can spot that the pair is trading in a strong bullish trend. And in this bullish trend, we can identify a significant support, the support that was respected multiple times by the market. And that support can give us the best level to buy the market from. Once we spotted that support, what we do, we set our buy limit order on that, and we are waiting for the entry. Once the trade becomes active, our next task will be to set a stop loss. And in our example, the ATR is 104 pips. Our stop loss for the trade will be half of that amount. So what we do, we take the entry level, and from that we measure 52 pips. That will be the safest stop loss for our trade. Here is the exact level for a safe stop loss. Buying from a key daily support, your target will be the closest daily resistance. Last thing that we should do, we should choose the target for the trade, and our target will be the closest key resistance. Analyzing the historical price action, we can easily spot a historical resistance. Here it goes, and our target for the trade will be based on that resistance. Look how perfectly the price went up and how perfectly the market reached the target here. The market trend is always your friend. The rule to trade support and resistance levels only in the direction of the trend is very simple, but newbie traders neglect that and lose a lot of money. Try this support and resistance strategy, backtest that on different forex pairs, and let me know in the comment section your results. As always, if you have any questions, please feel free to ask your questions in the comment section. Also, traders, if you want to see how I trade live, if you want to learn my trading strategy, do not forget to check my trading academy, the link in the description below. Also, traders, please watch my other videos.